Mm. Hi, Sharon. How are
Hi,
you?
Christine. I'm well. How are you?
Good, good, good. Yeah, thank you for coming on. And then, this is gonna be an interesting topic about real estate.
Yes.
So why don't we get started by you introducing yourself? Who's Sharon?
Okay, I'm Sharon Bohoman. I am a realtor in the East Bay of the San Francisco Bay Area. So I serve Central Alameda County, primarily Hayward, Castro Valley, San Leandro, San Lorenzo. However, I also help a lot of families relocate to the Central Valley from Sacramento all the way down to like Newman, Turlock area, because a lot of people, as I think people are hearing, are making an exodus out of the Bay Area and in a lot of cases out of California.
Yep.
So I work on both those sides. I've been licensed since 2002. I took a hiatus in 2010 after the whole everything fell apart,
Yeah.
and I came back in around 2017. And my office that I work with right now, Legacy Real Estate, has 5 offices. I'm in the Pleasanton office. We are affiliated with ERA Real Estate, which is a global company. So I primarily work with buyers and sellers of residential real estate. So I don't really do a whole lot at this point with investment or commercial.
Got it. Got it. Awesome. So yeah. So based on your, I know we talk a lot about, you're one of the realtor who actually care about, the finances of their clients. So why don't you talk
Hmm.
about, like, I mean, when it comes to preparation to own a home, like what do you think people should do to financially prepare to own a home? Because some people, like, they get into this mindset like, I need to own, and then versus renting. So, like, what are your thoughts on that? We'll talk more about, like, the owning versus renting.
Right. Yeah. So the biggest thing is you want to know where your cash sources are in terms of making sure you
Mhm.
have money for down payment and closing costs. So the amount that you'll need for down payment and closing will depend a lot on the actual sale price of the property and how much of a down payment that you plan to place, which will also depend on your credit score and many other factors. So typically, the first thing we recommend people do is take a look at their finances, working with someone like you or another financial planner to help them take a look at the bigger picture,
Mhm.
and see where you have assets available that could assist you in being able to purchase a home, whether that's tapping into, get taking a loan out against your of course, I go blank. Out of your IRA or your 401k, or some people
Mhm.
have that ability. There are people, especially here in the Bay Area, who may have stocks available to them if their company is
Mhm.
recently had an IPO and they've
Mhm.
gotten stocks. Then that's also a resource people may use. Some people are just very good at saving, so if you've been saving, but you want to make sure that you've at least got that amount. And even though there are programs that can help with down payment assistance and closing cost assistance, if you do have some cash available, that just puts you in a stronger position, especially to compete in the seller's market that we're experiencing right now.
Mhm. Mhm. Yeah, yeah. And also, of course, like, you have to check with your budget. Like, can you even afford this? So budgeting is the most important thing. It's like, okay, with the mortgage and then plus the, all the other housing expenses, you're gonna have new
Mm-hmm.
utilities. It might be more expensive if it's bigger, and then also, the insurance, the property tax. So you can either escrow it or you can save it yourself. So I'm not a big fan of
Mm-hmm.
escrowing because I'm good at managing my own money. So I escrow my own account because I don't like
Mm-hmm.
someone else holding my money. So
Right.
I plan for that myself. Okay.
Right. And your option to do that will be based on your loan to value. So how much you put down. People who put less down, let's say you come in with 3.5% down, they may
Mm-hmm.
not have as much leeway with the lender to say, hey, I want to escrow my own interest and insurance. But
Got
if
it.
you're
Okay.
coming in with maybe 15, 20% down, you got more skin in
Okay.
the game, lenders may be a bit more flexible with you in terms of saying, okay, you can go ahead and put money aside yourself.
Got it. Got it. That makes sense. Yeah. If you only have 3.5, then yeah, the lender might be like, yeah, you don't have much money, so maybe I'll escrow it for you. Okay. I didn't
Exactly.
think about that. Okay.
Yeah.
So all right. So let's talk about, what do you think the financial benefits between owning and renting? So when do you think it makes sense for someone to own versus to rent? So, like, for example, Bay Area, I mean, the rent is expensive. Owning houses is even more expensive. You need a large
Hmm.
down payment. It's not like Vegas. So I moved here to Vegas. So the rent is actually more expensive than some mortgage. So it makes
Hmm.
sense to actually buy a home. But then some people, they don't have the down payment, because then you still need about $80,000 of down payment if you're gonna buy a $400,000 house, or a 300. So that's 60K, $60,000 of down payment. So some people just don't have the money. So in Bay Area, that's a totally different story. So what do you think? Like, when do you think it makes sense for someone to own versus to rent?
Well, of course, they have to look at their overall financial situation.
Mm-hmm.
And as you were mentioning a moment ago, their ability to maintain the monthly expenses that are involved with home ownership. Because there's that culture shock, from coming from being a tenant. When you're a
Mm-hmm.
tenant, if something goes wrong with the property, you contact your property management or your landlord, and they fix that problem. Once you become a
Mm-hmm.
homeowner, not only are you now, you're paying the mortgage plus the taxes and insurance and
Mm-hmm.
HOA if that's the case.
Mm-hmm.
But if something breaks on your house, you have to fix it. So
Mm-hmm.
that's
Yep,
another
exactly.
expense you have to
Mm-hmm.
plan for. However, if you are in a position where you have set your financials up well and you've budgeted yourself well, it can actually be to your advantage because
Mm-hmm.
just on the surface, when you're looking here in the Bay Area and you're considering, so at least in my area here, Central Alameda County,
Mm-hmm.
2 bedroom apartments, easily $2,400 a month. If you're looking at a two
Mm-hmm. Yep.
bedroom house, you're looking at $2,800 a month. I have
Mm-hmm.
a couple right now, they're renting a 2 bedroom apartment and they're looking to rent a 3 bedroom house and they can't find anything under $3,200 a month. So it gets to a point now where you evaluate what your income is, what
Mm-hmm.
assets you may have, and determine, is it going to be more feasible for me to pay a landlord
Mm-hmm.
$3,300 a month and pay their mortgage and essentially, not have any return on that investment, so to speak. So you're
Mm-hmm.
making $3,300 a month.
Yep.
Every year you can count on a rent increase. Generally on your anniversary, you're going to have some increase. And at the point where you decide you're going to move out, if you've maintained the property well, you might get your deposit back and you'll be like, okay,
Mm-hmm.
cool.
Mm-hmm. Yep.
Whereas maybe I go ahead, if I have the ability to qualify for a loan and have the cash and know that I can maintain it with my
Mm-hmm.
budget, if I'm paying maybe a little bit more. So let's say I would rent a house for 3,300. If I step it up and say, okay, well, I'm going to take on a $3,800 mortgage,
Mm-hmm.
and we're talking mortgage in the sense where we're talking the full PITI, so the principal, interest,
Mm-hmm.
taxes, and
Mm-hmm.
insurance.
Mm-hmm. Yep.
So their taxes and insurance are bundled into that. So that's not
Mm-hmm.
an out of pocket monthly payment per se that they're having to pay on top of that
Mm-hmm.
monthly amount they're sending to their lender. But as you make that payment, a portion of that P in the PITI is your principal. You're
Mm-hmm.
actually building equity for yourself as
Mm-hmm.
you pay down that principal every
Mm-hmm.
single month.
Yep.
And let's say that in each case you live in the property for 5 years. If I'm a renter, I live in the property for 5 years, and then I decide to move. Maybe I get my deposit back. If I
Yep.
am a buyer and I own the property, well, the money I've been paying toward that has been benefiting me. And, over time, we have generally seen consistently there's appreciation. Of course, we had that huge dip with the Great Recession back in 2008. But people are still better off now than they were before that recession hit in terms of appreciation of their
Mm-hmm.
property value. So if 5 years later I decide to sell, well, I have some equity coming back to me and I'm going to be able to sell that property and walk away with a lot more cash. And or maybe I would have the ability, if I've built enough equity, I can take money out of that. I can hold this property, rent it out as an income property, and then use equity to go and move up into perhaps a
Mm-hmm.
larger home.
Mm-hmm.
So you've got more options available to you when you're a homeowner.
Mm-hmm.
Of
Yeah,
course, you have to
exactly.
evaluate what your core needs are and if it's going to be a benefit to
Mm-hmm.
your personal situation.
Yep, yep. It also depends on where you are at in life. But let's say you're like, oh, you're not sure if you're gonna stay here or in the Bay Area. What if I find somewhere else? I'm gonna move again. Then it doesn't make sense to own, right?
Exactly
Yeah.
right.
Yep.
Right.
Hmm. Okay. So, how do we properly protect your investment? What do you mean by insurance here?
Well, so there are a couple things. Whenever you take out a loan against a property, so if you're going to be taking out a mortgage, you will be required to insure that property. If you don't already have insurance and come to your lender with an insurance provider, they will provide an insurance provider for you. Just like
Mm-hmm.
when you go to purchase a vehicle,
Yeah.
before you drive that car off the lot, if you financed it, before you drive it off
Yeah.
the lot, you have to have insurance on
Yeah.
that vehicle because they want you to have comprehensive coverage so
Yeah.
that
Exactly.
you pull out the
Yeah.
parking lot and get broadsided by a car coming down
Mm-hmm.
the street,
Yeah.
there that's it's protected. Same with your
Mm-hmm.
property, especially now with California having the wildfires. I mean, in fact, perfect example. Unfortunately, a friend of mine, a colleague, um, just purchased a beautiful home in Winters earlier this year, and she posted pictures recently where the home burned down in the wildfires there in Napa. And
Mm-hmm.
so having that insurance, the lender's protecting that asset
Mm-hmm.
because they've got money on the line. They finance that, even though you own it, you're on title, but that collateral asset that is basically applied to that loan is now gone if it's burned down to the ground. So the
Yeah.
insurance is
Okay.
a big part of protecting it. The other part of protecting it um, is one thing I recommend my buyers do is speak to an attorney after they, or even before you close escrow in some cases, and you want to establish a trust and you want to put that home in a trust.
Mm-hmm.
And the reason I recommend that, and of course, I'm not an attorney, I'm not giving legal advice. However,
Mm-hmm.
in the state of California, if you do not have your property or your assets, and you probably already know this,
Mm-hmm.
in a trust, if for some unforeseen reason you pass away, your assets automatically go into probate, including your
Mm-hmm.
property.
Exactly. Exactly. Yep.
And it can be a tremendous cost for your family to have to go through that probate process. So by putting the home in a trust, one, you can plan and you can say exactly what you want to have happen with this property. And rather than them having to go through this whole probate process, which usually takes about 12 months, now with COVID, it may be extended a bit because of courts being closed or having limited services. Um, it makes it a lot easier. If the home is in a trust, then your successor trustee can just go ahead and list the property and sell it if they need to. They don't
Mm-hmm.
have to go through the court in order to take care of that. So
Mm-hmm.
those are some of the things that I mean when I talk about protecting your property.
Got it. Yeah, I had a couple of real estate attorney come on my life, so that is important because then,
Yes.
I mean, like it's not like most account savings or investments or 401k retirement, so you can put a beneficiary. So those
Hmm.
accounts, like yeah, if you pass away, you can just bring your death certificate and it will be payable upon death, right? But the house is not like there's a
Hmm.
beneficiary on the house. You can just like switch titles, so it's
Hmm.
gonna go probate. So that's why the trust is important. So especially if you have a
Yes.
very expensive house, like yeah, what if you pass away, you own the house, then where's the house gonna go to, right? So then you really need the trust. Yeah.
Right.
Hmm.
Well, and another thing is in the trust, you can say specifically who is going to be overseeing the administration
Hmm.
of
Yep, yep.
the disbursement of the funds. Because I don't know if you've ever seen this, but when someone passes away, it's all of a sudden all the long lost relatives who you've never heard from start coming out of the woodwork. Well, part of the probate
Yeah.
process is if you go to probate, the court is going to have
Yeah.
want a list of all of the next of kin, and they're going to
Yep.
contact those people. And
Yeah.
so now it's sort of like now everybody's kind of in the loop on, so it's a lot messier and it can be a lot more costly to have
Hmm.
to your family go through probate. So I
Hmm.
definitely recommend people talk to an attorney, and a good attorney will set you up with a trust. They'll set you up with a pour over will. So if at some point you take the house out of the trust
Hmm.
in order to refinance and you forget to put it
Hmm.
back in the trust, it still protects your asset and puts it back within the trust. So again, I'm
Hmm.
not an attorney, um, but that's something you'd want to consult with an attorney to make sure you protect that asset.
Hmm. Exactly, exactly. Yeah, there's a trust and will as well. That's like turbo tax for trust and
Hmm.
will. Yeah, trust and will is the website, but it's a turbo tax for trust and will.
Mm.
Okay, so yeah, so Sharon, like what I'm just curious because like you're from the Bay Area, so how's the market in the Bay Area doing now with
Right.
COVID? Like, was there any change?
I mean, right now, the Bay Area market is it's a strong seller's market, especially in the cities that are Bayside. The East Bay is doing really well.
Mm-hmm.
Actually, a lot of people have moved out to the Delta area, like Brentwood, Discovery Bay. They're seeing a lot of appreciation. The big challenge, pretty much nationwide, is a shortage of inventory.
Mm-hmm.
So for whatever reason, a lot of sellers are not putting their homes on the market. Either they're waiting, or either they're not sure what to do, or people have a variety of reasons. People may be
Mm-hmm.
waiting to see what happens with the elections. People may be wondering, okay, are we
Yep.
going to have another bout of COVID spring up during the flu season? So there are a variety of different things people are worried about.
Mm-hmm.
And buyers are out, and we have a lot of buyers out looking for property, and there's not enough supply to meet
Mm-hmm.
demand. And that's because the Fed's holding the rates down so low. So rates are
Mm-hmm.
still below 3%. They may edge up a little bit over the coming months. They may not go all the way over 4%, but they may edge back up into the 3% range. So we're kind of keeping an
Mm-hmm.
eye on that.
Yep.
But this is a great time for people who are in a position to buy, to really take advantage of these very low interest rates, because when the interest rates are lower, you
Mm-hmm.
qualify for more, and over the term of the loan, you're actually paying less for that loan because you're able to get
Mm-hmm.
it at a very low interest rate.
Mm-hmm. So, what do you think is going to happen with the real estate next year?
So again, I've been studying this because I keep hearing different stories, but I have a really good resource that I follow, and
Mm-hmm.
um, I'm sure some people have been hearing the reports out there in social media land about a huge crash and all these foreclosures and all these other things. But the really solid sources that I have are just not showing that right now. It's showing it holding pretty steady. Certain areas are going to be appreciating more than others, but they still see appreciation. The rate of appreciation may slow down in certain areas.
Mm-hmm.
And as far as foreclosures, I mean, there's always going to be cases where people are going to foreclose for one reason or another. But unlike 2008, which was set up really by a lot of bad lending practices, and
Mm-hmm.
people found themselves in homes with no equity and therefore no ability to refinance out of all the adjustable rate mortgages that were issued out during that time. This time, people have equity in their property. People have options.
Mm-hmm.
So in terms of unemployment, because that's the big thing people keep hearing, actually
Yep.
unemployment, even though it's a bit higher now, it's like up, I think, on a national level. And I've got my little, I got to find my little, right now, the BLS unemployment rate for September was at 7.9%. Which is it's actually coming down since it was like at 14% in April. Now it's down to
Mm-hmm.
7.9%, and it's been steadily going down over the months. A lot of the people who have mortgages, let me see here. Let me go to the stats right here. So 42% of homeowners own their houses nationwide, own their houses outright.
Mm-hmm.
We've got 16.6% that have 60 to 99% equity in their property. I mean,
Mm-hmm.
really, there's only 7% of homeowners that have less than 10% equity in their property. What this means is that if a homeowner finds himself in a position where they are concerned about being able to maintain their mortgage, they have options.
Mm-hmm.
So if they're really
Mm-hmm.
forward thinking and they say, okay, you know what, I just know I'm not going to be able to maintain this house, they have equity. They have the option to sell that house. They can talk
Mm-hmm.
to their lender about ways of maybe restructuring their mortgage or refinancing. There are options that are available. So while there
Mm-hmm.
may be some of the standard foreclosures, there's not a forecast showing that there's going to be like a slew of foreclosures like we saw back in 2008 through 2012. So that being said, if the inventory continues to be tight, they still see appreciation holding through next year. Um,
Mm-hmm.
right now, the only things we can't really predict is what's going to happen, after the election, what's going to happen,
Mm-hmm.
if the
Yeah, yeah.
pandemic kind of
Yep, yep,
resurges.
yep.
But based on where things are, there's been a V-shaped recovery, and it's looking pretty steady right now.
Okay, good, good. That's awesome. So, okay, what other advice do you have for people right now if they're trying to buy or
Hmm.
so what advice do you have for people? You especially in the East Bay market, so regarding
Hmm.
real estate, so what's your general advice for them?
So if you're looking to buy, there's a number of things you want to consider. And I'll tell you based on some of the things that I see.
Mm-hmm.
So first off, there's a misconception that somehow a buyer is going to benefit by going directly to the listing agent. During a seller's market, um, some buyers think like, well, if I go directly to the listing agent, then I'm going to have a shoe in because, well, they're the listing agent on the property. But if that agent is operating according to the National Association of Realtors Code of Ethics, we have no choice in which offer a seller accepts. We have to
Mm-hmm.
lay out the offers. We can talk to them about what the offers are, and then kind of advise them on what's a strong offer versus,
Mm-hmm.
concerns. And then we can advise them on how they may want to counter and the negotiation aspect of it.
Mm-hmm.
However, I think buyers should always have their own agent to represent them. So I think that's one of the first mistakes I see people making is that they'll go to the well, there's no open houses right now, but they'll go directly to the listing agent and try to work with that agent. And I kind of liken that to if you were going to go to court, let's say someone's accusing you of something, are you going to go to the
Yeah.
prosecutor and ask them to represent you, or are you going to get your own attorney and bring them in with you? And
Mm-hmm.
so when you get into a dual agency situation, which is legal in the state of California,
Mm-hmm.
you no longer have the same level of representation from your agent that you would if you hired your own agent. That agent now has to become neutral because they represent both parties. It's like they see both parties' hands, and then
Mm-hmm.
you're kind of walking a fine line. And
Mm-hmm.
so again, I just that would be the first recommendation. Second, one of the things you may notice when you speak to a realtor and you're interested in buying a home, a lot of people have a fear around applying for a loan to see what
Mm-hmm.
they pre-qualify for because they don't want their credit to be run. But
Mm-hmm.
in order to really get a pre-approval, which is different than a pre-qualification,
Mm-hmm.
you have to submit the application. You have to submit the documentation because that's the only way a lender is going to be able to give you a true number that you're working with. When it
Mm-hmm.
comes to running your credit for a mortgage, the credit bureaus, they know that, okay, this is a mortgage company, this person is shopping for a home. It's not going to have the same effect on your credit as, say, applying for, a Macy's card or Kohl's card or
Mm-hmm.
some a revolving account, for example.
Mm-hmm.
So go ahead and get the pre-approval because now you know
Mm-hmm.
what you're working with. And this is also important because with COVID, we've got a whole new protocol that we're having to work with in terms of showing homes. So gone are the days of open houses where you can just kind of freely go through homes the way you want. With COVID, we have to follow protocols. We can only show
Mm-hmm.
properties by appointment. We have to wipe the properties down. We have to wear masks, sanitize, all the protocols, certain postings, and everything's, again, by appointment only. So especially for owner occupied properties, we are trying to minimize exposure to the occupants and to the property for anyone who may be carrying, the COVID virus but not be aware of it. So a lot of listing agents, there's a form that has to be completed, and then a lot of sellers and listing agents are wanting to see, do you have a pre-approval? Are you a
Mm-hmm.
viable buyer? Or
Mm-hmm.
if you're paying cash, do you have verification of funds? Can we see that you
Mm-hmm.
actually have the cash to buy the property? Because we don't want just a bunch of folks going and looky-looing through the properties
Mm-hmm.
if they're not serious buyers.
Yep.
So be prepared for those changes. It's not business as usual when it comes to
Mm-hmm.
real estate. And I don't know that we'll
Mm-hmm.
really get back to that. I think these are going to be holding out. These protocols are going to be holding out for a long time. And
Mm-hmm.
these aren't just us trying to make things difficult. These are protocols and rules set by Cal OSHA and by the California Association of Realtors and by local jurisdictions. So whatever county you happen to be in. So
Yeah. Okay. So can you explain again what's the difference between pre-approval and then pre-qualification?
Yes. So you know how you can, let's say you're on Zillow and you're looking through and you see a property and then
Mhm,
there's a
mhm,
little thing. It's like, oh,
mhm,
what would my monthly payment be, right? And
mhm,
so
mhm,
you fill in some general questions. Okay, my annual income is this, blah blah blah, and then it just kind of cranks
mhm,
out a number.
mhm,
And so on some of those online sites, it'll say, okay, based on the information you've just submitted, you're pre-qualified for
mhm,
this amount.
mhm,
But that's based on absolutely no underwriting. It's based on no documentation. This is just an
mhm,
algorithm that cranks out a number.
mhm.
And it doesn't even know what your credit score is. You won't
Okay,
know. So a
got it. Okay,
pre-approval, yeah,
got it.
pre-approval, you
Got it.
actually
Mhm,
complete the application. You have to give the documentation required. They're going to run you through desktop underwriting, which often is referred to as
mhm,
DU. And based on your credit score, your income, employment verification, all those things are going to take place. And then they are going to, through that desktop underwriting, be given a number that financial institution says,
mhm,
we will loan you this amount of money if
mhm,
to purchase a home. And it's important where you plan to purchase. So here in the Bay
mhm,
Area, we are in high cost counties. So the
mhm,
conforming loan limit is higher than the standard national loan limit. So we're at
mhm,
765,600 for the conforming loan limit. Once you pass that, you're in the jumbo range. If I
mhm,
hop over the Altamont Pass and go into San Joaquin or Stanislaus County, the conforming loan limit drops to 510,000. So if you talk to a
mhm,
lender here in the Bay Area, they pre-approve you for 700,000
mhm,
on a conforming loan, and then you decide, hey, I'm going to go buy a house in Mountain House or Tracy. You may have an issue. So you want to make sure you let your lender know exactly where you're planning to buy, because then they're
mhm.
going to base your pre-approval on the county that you're going to be looking to purchase in.
Got it. Got it. Okay. So have you noticed foreclosures and evictions during the COVID?
Well, there's an eviction moratorium, so there cannot be any evictions right now during this time. So no, on that sense. As far as foreclosures, here's the thing with foreclosures. I mean, there may be some general foreclosures. There's not
Mhm,
an uptick per se in foreclosures. And then I get a lot of people asking me like, well, hey, can you help me find and buy a foreclosure?
mhm,
I'll just tell you, here in the Bay, now there are agents who specialize in foreclosures, and so maybe they've got inroads that I'm not aware of. However, the Bay Area is a hotbed for investment. So
mhm,
investors love the Bay Area. And if you have a home that's distressed, that's in foreclosure, that has a notice of default, any of those things, and it's going to be going below market value, you're going to be competing with a lot of cash buyers on that property. And so
mhm,
you could try it, but just be ready for the
mhm,
competition and to be
mhm.
competing against cash buyers.
Got it. Got it. Thank you. So, how many percent of cash buyers have you seen so far? Like, what's the percentage usually?
I mean, so I have seen where there are multiple offer situations,
Mhm,
and like in one situation, this was a house that was in Oakland. It was priced at, I want to say 399 because it needed a lot of work. There were 25 offers that came in on that, and I think of those 25 offers, probably 80% of them were cash.
oh, wow.
Yeah.
Where's this money coming from? Okay, so
Well, there are people out there that have cash. I mean, there are a lot
yep,
of
yep, yeah.
investor groups in the Bay Area because
Mhm,
they like to snatch up, because these Bay Area
yep,
properties,
mhm,
have a lot of value. So if someone can get
yeah,
their hands on one and either flip it or hold it,
mhm,
they know that they've got,
yep,
if they can get it at a low enough price, that
yeah,
is.
yeah.
Yeah.
Okay, yeah. So Sharon, thank you so much for coming. Any last minute words you have before letting people know how to find you?
Um, I think the main things, if you're looking right now, again, those I'll just put those main points out there. Contact a
Mhm,
realtor, talk with them, interview them. If it's a good fit for you, then the next step, as they will advise you, would be to talk to a lender. And you
mhm,
want to go ahead and give that lender, if you're
mhm,
ready to make that move. And actually, even if you're not ready to make the move, so let's say you're wondering, okay, where am I? Am I
mhm,
ready to make a move, or is there anything I
mhm,
need to work on? You can
mhm,
still go and talk to a lender. You can get a
mhm,
pre-approval, and they can give you an overview of where you are. So you fill out the application just as if you were applying for a loan. But in most cases, that doesn't mean just because you get pre-approval that you have to buy a house right now. A lot of
Mm-hmm.
times what that will do is uncover for you, what is it that I need to work on? Is there credit I need to clean up? Do I need to save more money for the down payment and or closing costs?
Mm-hmm.
Um, are there certain loan programs I may qualify for? So,
Mm-hmm.
VA, USDA, depending on
Mm-hmm.
where you plan to move,
Mm-hmm.
Cal HFA, down payment assistance programs. This is going to give you an idea because I've actually worked with a few buyers who I started a year ahead with them. And then once they talked to the lender outlined for them what they needed to do to get prepared, and it took them about a year, and then they were able to purchase their home because that lender was able to let them know exactly what they needed to do to get
Mm-hmm.
themselves in a position to purchase the home.
Mm-hmm.
Yeah.
Got it. Awesome. So, how can people find you, Sharon? Are you on LinkedIn? Like, where do you hang out the most on social media?
I'm usually on LinkedIn and Facebook. I am on LinkedIn. Sharon Bohoman. Bohoman's a pretty unique name. So if
Mm-hmm.
you Google Sharon Bohoman, and that's spelled B like
Mm-hmm.
boy, O H like Henry, O
Mm-hmm.
MAN, then you'll find me there. SharonBohoman.realtor is my website,
Mm-hmm.
and yeah, that's probably the best way to find me
Mm-hmm.
online is on
Okay. Well,
LinkedIn.
I will tag you, of course, so people can connect with you if they have any real estate question, especially in the Bay Area. So you'll be the go-to person. So thank you so much, Sharon, for joining. I really appreciate this. Have a good night. I know it's Friday, so enjoy your Friday night, and I'm gonna enjoy mine. So and have a great weekend. Okay.
Thanks for having me. All right, thank you.
Okay. All right.
All right,
Bye bye.
bye bye.